This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you in part by
TheStreet.com. Up-to-the-minute stock market news and in-depth analysis. Our quant ratings service provides objective, independent ratings daily on over 4,300 stocks. Learn more at TheStreet.com/NBR.
Another delay in another key element of the new health insurance law. This one for online enrollment of small businesses. So who is affected and what does it mean for the website with a critical November 30th deadline just days away?
Under the hood, as stocks hit new records, do you know what your mutual fund owns? A close look can sometimes reveal risky, complex, and volatile securities.
Planes, trains, and cancellations. When a big storm collides with one of the busiest travel days of the year, what's the cost to the airline business and to flyers? All that and more tonight on Nightly Business Report for Wednesday, November 27th.
Good evening, everybody. I'm Sue Herrera, in tonight for Susie Garrett.
And I'm Tyler Matheson. Welcome. More records on Wall Street today, more delays in Washington. And the nation's capital is where we begin tonight, with more news of trouble implementing the president's signature health care law. On Thanksgiving Eve, with just one business day left before a key deadline, the Obama administration has delayed another part of the Affordable Care Act because of lingering problems with the Healthcare.gov website. This time, the administration is delaying for 1 year the ability of small businesses to use the website to buy health insurance for workers. Now, those companies can, however, use agents or brokers to buy coverage, or they can go directly to insurers. Late today, there are reports as well that Hewlett-Packard will be a late-inning replacement for Verizon as the web host for the site. Bertha Coombs joins us now with more. Bertha, what does this delay mean for small businesses and their employees? Who does it affect?
It affects businesses with fewer than 50 employees. They are not mandated to provide them with insurance, but this program, the SHOP it's called for small businesses, would allow them to look at plans and enroll employees automatically. Originally, they had delayed it till November 1st, and now it's being delayed for another year. They will still be able to get their tax credits retroactively if they enroll through a broker, the way a lot of small business already do it. But it just indicates, Tyler, that they are having still a lot of technical issues on trying to clear things up on healthcare.gov. And this afternoon, Dow Jones is reporting that Hewlett-Packard will now serve as the host of healthcare.gov, replacing Verizon's Terramark unit. You may recall last month they had an outage that lasted for more than a day because of that hosting company that having gone down. Their fail-safe and backups didn't work. They had another unexpected outage this week that appeared to have been related to that. And so it appears now that they are calling an audible once again here and changing over to a new hosting company. So that kind of tells you that even though they continue to say it will be working much better by this weekend for the vast majority, that's the key phrase, the vast majority of users, there's still a long way to go to get this really up to snuff.
You know, Bertha, maybe the late news from HP is part of the contingency plan, but what are other contingency plans out there if the site still isn't able to meet demand for the enrollment?
Well, they're still telling people to try on the phone and to try with brokers, and they're even trying to work with brokers to see if you know which insurer you want to go to directly enroll with some of those insurers. But it continues to be a situation where it's not likely to be smooth for everybody trying to enroll automatically online.
Bertha Coombs, thanks very much.
More milestones reached during a quiet session in the markets today after first-time jobless claims fell by 10,000 last week. Business activity in the Chicago region picked up this month, and the final reading on consumer sentiment for November edged higher. The Dow, the S&P, and the Dow Transports and the Russell 2000 all reaching fresh closing highs today despite low volume in pre-holiday trading. Here's a look at the final numbers. The Dow up 24, ending at a record closing high for the fifth straight session. The Nasdaq added 27, hitting a fresh 13-year high, and the S&P was up 4. And as U.S. stocks hit new highs, a growing number of mutual fund managers are investing in complex securities typically bought by hedge funds. We'll tell you why and the importance of knowing what's in your fund a little bit later in the program.
Well, Sue, snow, sleet, rain, punishing winds, all combining to make this Thanksgiving Eve, the busiest travel day of the year, by the way, a nightmare. It's grounded or delayed hundreds of flights, snarled traffic on some of the country's biggest and busiest highways. So what does this all mean to the airlines and to the economy? Kayla Tausche has more.
Combine severe weather and the nation's busiest travel day, and you get one hectic holiday. Winter storm Boreas barreling up the eastern seaboard, throwing a wrench in Thanksgiving travels for millions of Americans. FlightAware CEO Dan Baker said the effects have been felt in cities across the U.S.
We got off to a rough start to the week. There was some really bad weather, really that hit the Dallas-Fort Worth area on Monday, and it really got the airlines off to a bad start. The weather wasn't too bad yesterday, but today is looking pretty bad across the entire East Coast.
More than 1,500 flights were canceled outright between Monday and Wednesday. With cancellations growing by the hour, Newark International Airport saw the most disruptions. United Airlines, for which Newark is a hub, was waiving change fees for customers looking to rebook. JetBlue doing the same for 15 airports. Passengers on some 3,000 flights Wednesday saw their route delayed, many upwards of an hour. Ryan Gardner of Philadelphia found out his Delta flight to Atlanta was pushed back, but was just glad it wasn't worse.
I'm hoping just an hour and 15 minutes, 2 hours most, but whatever. I'm not working, so I'm relaxed and I'm in for the long haul.
Beyond shelling out for airport food and drinks, it's unclear how the cost of the storm for airlines will be passed on to the travelers. It is clear it will be costly for the industry. Airlines for America said in 2012, delayed flights cost the industry $7.2 billion in operating income, or $78 for each minute delayed. With Thanksgiving a day away, passengers just want to get to their destination any way possible.
We hope to get to Shreveport in time for Thanksgiving.
This holiday, that's something to be thankful for. For Nightly Business Report, I'm Kayla Tausche, Newark, New Jersey.
Hope all those bags get there. Looks like the merger between American Airlines and U.S. Airways has gotten the final clearance for takeoff. A federal bankruptcy judge today approved American's parent company, AMR, to emerge from Chapter 11 bankruptcy protection, as well as the terms of the company's settlement with the Justice Department. That clears the way for the merger.
The Federal Aviation Administration is warning that Boeing aircraft that use jet engines made by General Electric could experience some forced landings. This follows a series of icing incidents in high-altitude thunderstorms, where some of the GE engines that have been placed on 787 Dreamliners and the 747-8 jet lost thrust mid-flight. No injuries or incidents, though, were reported.
Well, some big U.S. banks are in the Justice Department's crosshairs now over their hiring practices in China. This comes after Wall Street watchdog the Securities and Exchange Commission sent a letter first to Goldman Sachs and then to Morgan Stanley and Citigroup investigating allegations of bribery and hiring the relatives of top Chinese government officials. In return, the companies may have received favorable business treatment.
And some of those same banks, along with a few other top lenders, may need to have a lot more money on hand to cover up bad loans, or to cover, I should say, bad loans. Credit rating agency S&P says the biggest U.S. banks may have to spend another $104 billion to resolve mortgage-related legal issues with investors and counterparties as they try and put the subprime crisis to rest.
Well, applications for new mortgages dipped a little lower last week, down for the fourth week in a row. The Mortgage Bankers Association says the rate on the average 30-year fixed-rate loan edged a fraction higher last week to 4.48%.
But higher mortgage rates don't seem to impact many buyers from China who are flush with cash and leery of political instability at home. So California real estate is fast becoming the place to park their cash and also their families. And that's leading to a new boom for builders who are now catering to these new home buyers. Diana Olick reports.
At a brand new housing development in Irvine, California, thousands of potential buyers are touring models. The vast majority of them are Chinese, and most steered clear of our camera.
They see the market here, there's still room for appreciation.
Irvine realtor Kinney Yang's phone is ringing off the hook.
What's driving them over here is that they have this cash that they have, and they want to park it somewhere or invest somewhere.
But they're not just investing in real estate. They are investing in their children's future, specifically their education.
We're seeing a lot of Asians who are buying here as an investment, but their kids are going to school here.
That's Brian Yang's plan, whom we spoke with from China via Skype. He bought an older home in Irvine and plans to move there in 5 years when his daughter turns 10.
Education in American is very good and world class. So the first one is for education. And I think the second one is for the property appreciation.
For now, he's renting the home and getting a 5% return. But over in the new Great Park Neighborhoods development, big U.S. builders like Lennar, Pulte, Ryland, and K. Hovnanian are rushing to cash in, even employing the multi-generational floor plans and feng shui designs that Chinese buyers want. And cash is king, a seemingly limitless amount.
The price they're looking, it doesn't matter, 800, 1 million, 1.5, whatever. They like it, they will, purchase it.
While education and investment are the primary drivers, quality of life doesn't hurt either. Many of the buyers we spoke to said they like the climate and the lack of pollution in California, and the political stability doesn't hurt either. As for where all that cash is coming from, nobody wanted to talk about that. For Nightly Business Report, I'm Diana Olick in Washington.
And to read more about what's driving this new boom for home builders, head to our website, nbr.com.
And still ahead, ever wonder how the world's largest retailer makes sure its shelves stay stocked on Black Friday? Well, we got a rare look inside Walmart's very complex operation.
Are you seeing more ads on your mobile phone or your home computer these days? Well, that's no accident. Seeing a big boost in e-commerce sales, U.S. retailers will spend more on digital ads this year than they did in 2012, with the group eMarketer predicting stores will increase their digital ad spending nearly 16% to almost $10 billion.
So will all those advertisements make you want to spend more money this holiday season? Well, NBR took to the streets asking consumers what their shopping plans are for this holiday season.
I'll do my shopping probably the first weeks of December.
I'll do some department store shopping. I'll do some boutique shopping.
Christmas shopping is not going to happen until right before Christmas, which is pretty traditional.
I do a lot of online shopping.
I shop at stores, and I have a problem because I like shopping for myself more than I do for other people.
Well, with all that spending, stores have to be prepared to get enough of those Black Friday bargains from warehouses to stores in time to reach those eager consumers. And it's said that Walmart has the most sophisticated logistics system in all of retail to do just that. Courtney Reagan gets a look at how it all works for the world's largest retailer.
Walmart's logistics execution is central to its ability to keep prices low and stave off competition. This distribution center in Tobyhanna, Pennsylvania services 97 stores in 4 states, as well as .com orders. Walmart projects total e-commerce sales will grow to $9 billion this year. As a result, the company has had to further enhance its efficiency so distribution centers can help with .com fulfillment.
As our efficiencies have increased and our ability to control inventory as a company, we require half of the inventory that we used to require. It made good sense as a company, I think, to utilize that space. And we do that through these e-commerce centers that we can have within a regional distribution center.
This is one of 158 Walmart distribution centers in the U.S. This one covers 1.2 million square feet of floor space. There are 17 miles of conveyor moving 18,000 cases per hour.
While much of the process is automated, there's a critical human element as well.
If you ever play Tetris, it's basically the same thing. It's just basically doing the human-like form of it.
On this trip, our driver, Gene Bartlett, arrives to pick up a trailer filled with products going to a store in North Bergen, New Jersey, 2 hours away. Gene is one of Walmart's 7,200 truck drivers, each logging more than 100,000 miles a year. At the store, the associates are ready, knowing the moment the truck will arrive and greet it, prepped to unload its Black Friday merchandise. For Nightly Business Report, I'm Courtney Reagan.
Well, Hewlett-Packard was the best performing stock on the S&P 500 today, and that is where we begin tonight's market focus. The stock rose after the former Dow component posted a profit, reversing last year's loss, as we reported on NBR last night. But today, CEO Meg Whitman made it clear that she's looking for revenues to stabilize in the new year, but not grow.
Well, it is a pivotal year for HP, and what we said at our security analyst meeting about 6 weeks ago is you should expect revenue to stabilize, probably not grow in 2014, but stabilize, and you'll see real progress in terms of our innovation, our operational excellence, and our ability to deliver great products for customers.
Shares climbed in today's session up 9% to $27.36. Well, despite its growing list of competitors, TiVo added a lot of subscribers. The maker of digital video recorders beat Wall Street estimates, so its customer count increased now for the 9th straight quarter. More people are turning to TiVo because it allows access to online video like Netflix and Hulu. Still, investors were bearish on the stock today. They were down more than 4% to $12.66. CVS Caremark announced today it will buy the specialty drug infusion business Coram for about $2.1 billion. Coram is an infusion therapy provider treating problems like immune deficiencies and multiple sclerosis. The acquisition will help CVS diversify its treatment offerings. The news sent shares to an all-time high, up 1% to $66.76. Shares of Foster Wheeler popped today on reports that the British engineer AMEC is eyeing a takeover of the company. That would create an $8 billion energy provider. Goldman Sachs reported to be the advisor on the potential deal. Shares higher by 6%, $30.49.
Yesterday, we told you that Aeropostale's shareholders are pushing for the teen retailer to sell itself. But one analyst says Abercrombie & Fitch is a better buyout candidate. The analyst at FBR Capital Retail said Abercrombie & Fitch was the best value among teen retailers. That sent shares of Abercrombie up 2% to $34.37, and shares of Aeropostale down almost 2% to $9.84. And yet another teen retailer issued a weak forecast. Tilly's saying poor traffic trends and high promotions will hurt its bottom line. The company also reported a revenue miss, and that sent shares nosediving down a full 24% to $12. And the network equipment maker Infloblocks is predicting a weaker than expected second quarter. The company's loss widened as margins weakened and costs rose. Shares have almost tripled in the past year on strong demand for its products, which help companies manage internet traffic. But today, the stock tumbled, down more than 28% to $32.08.
Well, exotic investment products got loads of blame for sparking the financial crisis 5 years ago, but now, as investors struggle to generate returns on fixed income assets, some retail mutual funds are turning to new types of similarly complex packaged securities to get higher yields and protect against risk. But how risky are the products, and what do you need to know about what may be in your mutual fund? Here to discuss is Mark Okada. He's co-founder and chief investment officer at Highland Capital Management. Mark, welcome. Good to have you with us.
Great to be here, Tyler.
You have funds that have in them, among other products known as collateralized loan obligations. I need you to explain for the viewers tonight what they are and whether I should be worried about them. Because whenever I see the word collateralized, because I remember collateralized were a lot of the products that ran into trouble in the financial crisis, CMOs, CDOs, and then credit default swaps, I start to worry. Should I?
Well, you should be concerned when you don't understand something. And the idea about a collateralized loan obligation is something we should discuss. So what really a CLO is, and we did the first CLO, our firm Highland Capital did the first CLO back in 1996, it's just a securitization of bank loans. And the fund that we were talking about earlier invests a small proportion, about 10% of our capital, in the debt of these transactions. What's really important, though, and to the concern that you just mentioned, is that a lot of the baby has been thrown out with the bathwater when we look at the entire collateralized bond market, the CBO market, et cetera, et cetera. And CLOs have been really, I think, difficult to understand because they've been clouded with that whole market. So specifically, we've seen a lot of resurgence in activity in this space because CLOs, unlike a lot of those other brethren you talked about, have done very, very well. The default rate and the loss in that space over that entire history from 1996 to today has been less than 2% in its entirety as far as realized default losses.
Yeah, Mark,
so, yes.
What makes it attractive also, as I understand it, is you do get a higher yield, but the rate also floats. So if interest rates do tend to go up, you get the advantage of that, correct?
That's right, Sue. So we're doing this in a bank loan mutual fund, which a lot of investors are allocating to today because they want to get away from that interest rate risk that they find in their fixed income. And CLOs, just like bank loans, are floating rate. And so you're exchanging one type of risk for another. You're not taking interest rate risk, which right now is really a difficult thing and something you should be concerned about, and you're substituting that for floating rate, which is a great benefit for investors today.
So low default risk you maintain here and have the facts to back it up. What are the kinds of loans that are in these collateralized loan obligations, these packaged securities? What kinds of loans?
Right, so bank loans are just like high yield bonds. They're below investment grade, and we use them in general, called leverage finance, to really finance all of the M&A activity, leverage buyouts, leverage recaps. So when you think about bank loans, those are the type of bank loans that the market is investing in today, but they're also the type of bank loans that collateralize the CLO. One important point about the CLOs that we deal in is that their credit quality is actually higher than our bank loan portfolio. So the CLOs themselves are rated investment grade, so they have less intrinsic risk than the actual loans that are in the collateral pool. And it makes sense because you're secured by those loans and you have equity cushion below you.
Very quickly, who's doing the rating of those loans, and can I trust them?
Moody's and S&P. And so you're right to make that point. And we have an entire business of making sure that we understand exactly what's in all of our CLOs. We're not relying on the rating agencies for our analysis. Our team really rips apart all of these transactions, and that transparency makes us not worry about what we're doing.
Mark, thank you very much. Have a great Thanksgiving.
Yeah, you too.
Mark Okada is co-founder and chief investment officer at Highland Capital Management.
And coming up, why American winemakers are toasting another year of bumper crops. Seen any good movies lately? Well, Disney has made some pretty good ones. The studio just announced that its movies have passed the $4 billion mark at the global box office this year for the first time ever. And the company cites big hits like Iron Man 3 and Monsters University for some of that big money.
You got some movies on your list this weekend?
Just Frozen.
Yeah, all right. There's a lot of money being spent on wine, not just in the theaters, but especially around the holiday time, people like to buy nice wine. Trouble is, some published reports say there may be a shortage in the world's supply of wine. But as Jane Wells shows us, California's Napa Valley, the country's leading wine region, appears to have plenty to toast this year.
Cheers. In a Napa Valley winery, Willie and Corey Robertson of the TV show Duck Dynasty toast their latest business venture, wine.
I tried to make wine one time and realized that I was not that good at it.
Their new Duck Commander wines are selling in Walmart, expanding the wine audience at a time when one Wall Street report suggests the world is running short on wine.
Are we going to run out of wine?
No way. Thank goodness. The harvest has ended in Napa Valley, and it looks like a bumper crop for the second year in a row.
It's exceptional. It's going to be a vintage year, is what they're saying.
2013 was a great crop, both in quantity and in quality. It was probably up over 4 million tons, which is above average.
Bob Torkelson is CEO of Trinchero Family Estates, the nation's fourth largest wine producer behind labels like Sutter Home and Menage a Trois, the best-selling red in America. The company is spending $300 million to expand. And even though overall volumes of wine in the U.S. are only up a little, revenues are growing faster as people trade up to wines priced $15 to $20.
There shouldn't be any wine sold over $10.
So
Opus 1 shouldn't be more than $10?
Especially Opus 1.
That's Fred Franzia, the man behind Charles Shaw, also known as $2 Chuck, which is now $2.50 due to inflation, and sales have reached 800 million bottles.
We must be doing something right.
At the same time, California winemakers ship 1 out of every 5 bottles overseas, and China is the fastest growing market. However, it has been the most difficult to uncork.
China is a big puzzle for us right now in the industry. We're really trying to get our hands around it and understand it. The French have a very big head start there.
Here at home, wines face competition from craft beer and spirits. But winemakers are holding their own, finding new markets. Knowing there's no shortage of wine to choose from is certainly something to drink to. For Nightly Business Report, Jane Wells, Napa.
Sure is. Finally tonight, another record-setting auction in New York City last night, but this time it wasn't for a work of art. An anonymous bidder paid more than $14 million for a book of Psalms. What makes the tiny book of Bible passages so valuable is that it's believed to be the first book printed in what's now the United States in the year 1640, with only 11 copies of what's called the Bay Psalm Book have survived for the last 4 centuries. The $14.2 million is the most ever paid for a book. And I'd say you could call that a work of art.
Yes, absolutely.
Yes.
And from all of us here at NBR, we wish you all a very happy Thanksgiving and a happy Hanukkah.
That's Nightly Business Report for tonight. Do have a great holiday. I'm Sue Herrera. Susie's back on Friday.
And I'm Tyler Matheson. Sue, have a great holiday.
You
Great
too, Ty.
Tune in tomorrow for a special Thanksgiving edition of Nightly Business Report right here on your public television station.
Nightly Business Report has been brought to you in part by
TheStreet.com. Up-to-the-minute stock market news and in-depth analysis. Our quant rating service provides objective, independent ratings daily on over 4,300 stocks. Learn more at TheStreet.com/NBR.
I'm Tyler Matheson with a Nightly Business Report news brief. More milestones reached during a quiet pre-Thanksgiving session in the markets after first-time jobless claims fell by 10,000 last week. Business activity in the Chicago region picked up this month, and the final reading on consumer sentiment for November edged higher. The Dow up 24, ending at a record closing high for the 5th straight session. The Nasdaq added 27, hitting another fresh 13-year high, and the S&P was up 4. Enough for its own all-time closing high. The Obama administration is now giving small business owners an entire year to sign up their workers for health care plans on the federal website. And a federal bankruptcy judge gave the final okay for the merger of American Airlines and U.S. Airways. And tune in to Nightly Business Report here on your public television station.